Hey guys, this is Sebastian Guerra here and welcome to Guerra Financial Tips. Today we're going to be discussing how you can sell your investment properties and avoid capital gains tax when you go around and sell them. You see, about 2 months ago, I ended up meeting with a gentleman who had purchased a property about 15 years ago for about $400,000. He had put in an additional $200,000 in upgrades for a total of $600,000. He still has his property rented after 15 years and is currently generating about $5,000 a month in rent, but after property taxes, insurance, repairs, HOA, vacancy, and also property management, he is now netting only about $3,000 per month in income that he gets to spend, which is about $36,000 a year. You see, he was getting tired of managing this property as he was entering retirement, and he didn't want to continue to deal with all of the headaches that the property was giving him. So he was trying to see if it made sense to sell the property and put the funds somewhere else. But his big concern was, how are taxes going to affect him if he turns around and sells this property? You see, after 15 years, this property is now worth $1.2 million. This is $600,000 more than what he's put into it. So to understand how taxes work, we first need to understand what is a capital gain. You see, a capital gain is classified as any gains of an investment that has increased in value on the property up until the moment that the property is sold, which in this case, it would be about $600,000 in capital gains if there have been no depreciation that's been taken. So the concern that he had is, how much will he have to pay in taxes if he turns around and sells the property? And after running all the calculations, it turns out that he was going to pay about $111,000 in total taxes when you factor all form of taxes based on the state that he's living in. So the question is, should he sell the property and pay the tax and then reallocate the funds, or is there another route that he can take? You see, the good news is that the government has come up with something called a 1031 exchange. And the way it works is that you will be able to sell this investment property, and after the sale of the property, all of the proceeds from the sale will go through something called a third-party intermediary, which will now hold all the proceeds from the sale of the property, and in his case, it was about $1.2 million, and now if he wants to avoid paying the $111,000 in capital gains, he now needs to use those funds and buy another property with it. But here are the rules. Number one, you need to make sure that you identify the property within 45 days of you selling your original property. And then number two, you have to close on that property 180 days from the date that you sold the original property. Now, if he does not close on the property within the 180 days from selling the current property, the capital gains will be triggered. The rule is that he has to grab these funds and purchase real estate with it, and it must be valued at least at the same amount of the old property that he sold. So the question is, does it make sense for him to sell the property and buy another one? Well, I think we need to be thinking about this depending on what our priorities are in our lives. You see, there are many people that are in their 30s and their 40s that have the energy of wanting to deal with property management, and they don't mind the stress that it can bring. But then there's other people that unfortunately that are entering their stage of retirement that they begin to get tired of dealing with all of the headaches that property management and tenants might bring. And this is where some people are willing to pay the tax and get it done with and just reallocate the funds in other assets that can consistently give them a level of income that can sustain their quality of life without the stress of having to go into property management. Now, there are great things that investment properties bring, such as tax benefits, the appreciation of the property, as well as the income that it generates throughout the year. So if you're in a situation where you're considering doing a 1031 exchange, feel free to reach out to us. We can assist you in running all the analysis of your property and compare it to other options. I really hope you enjoyed today's financial tip. We'll see you next week.